Hello guys, welcome to another video on your channel Phoenix Trader. In this video, we will be analyzing the Nifty 50 and Bank Nifty for the upcoming week. So let's start with the Nifty 50. So we are seeing here a weekly time frame basis chart for the Nifty 50. In this Nifty 50 chart, if you see on a weekly time frame basis, we had correction from 20,000 level. We almost touched 19,200 levels, and from there in the last 3 weeks we have seen a swift momentum which we have come up to 20,002 to triple two level. So which is almost like, if you see, it has been 1,000 point rally in 3 weeks, so which is very quite a good momentum. And as of now, like, let's start with the analysis for the upcoming week. Now if you see, previously we had a level wherein we had an all-time high of 19,000, almost 20,000, we can say. We can round it off to 20,000. So if we just modify this, okay, let's see. So we will mark this 20,000 as the level for R1 base, which might act as a support. When you, like, if you see, there might be a correction on weekly time frame basis. This, we had never given a closing above this level. Then we gave a closing above almost like 20,200 level. So now in the next week, what we can expect is the, if you see, the one level which will be a support is 20,000 level. And if you see, we will mark the previous week high, which is around 20,000 triple two. So we got the another level which will act as a resistance zone over here. And if you see, the low for the previous week was almost 19,000 860 odd levels. So which is very high zone for considering the range for the weekly time frame basis. But the one point where we might be the we get the support is around 20,000 level. So in the last 3 weeks, we have seen a swift momentum, and there has not been any correction as such in the previous rallies. So in the upcoming week, we might expect some correction or the sideways momentum. As we have seen on the Friday, we have seen, major correction in the Dow Jones and the Nasdaq futures. Nasdaq. So already the Gift Nifty, if I show you, Gift Nifty is already showing us almost 89 points. As of now, it is suggesting that we might open gap down by 18, 80 or 90 points. It depends on Monday morning how it might be the case with the Dow Jones future and other. But as of now, with considering this as our base, we will start analyzing and make our level so that we will be clear to what extent the correction might happen, or to which level we can buy or sell. So let's move with the daily time frame basis. If you see on the daily time frame basis, we have we have marked this our weekly time, these level on weekly time frame basis. If you see here, we have, as of now, if you see, the Gift Nifty is showing around 90 points gap down, so which comes around 20,100 level. So as of now, so depending on that, if you see here, we'll mark this level which is around, it comes, in confluence with the two candles over here. If you see, we had a gap up opening and then we saw a correction. And the next day candle, if you see, the almost, and the next day candle also you see, which is in confluence with this level of 20,100. That, if you see here, this 20,100 level might act as a support zone on the daily time frame basis. But on the Friday, we have seen a lot of volumes, which is quite promising. But as of now, we have to digest what the Dow Jones and Nasdaq future had given us the correction. So we will expect a gap down on Monday morning. So 20,100 level might be the crucial support, crucial zone where the Nifty might be opening. And on that time frame basis, we will move to the hourly time frame basis. If you see, we have these levels which we have confluence now. Like, I'll try to hide this for a moment. If you see this levels, what we had marked, this, the level can't be a accurate level like 20,100. So this zone of maybe 20, 30 points plus or minus might be the range where we can expect a correction when means the price might go down by plus or minus 20 points. Like see here, this one we had resistance over here, and even the price was not able to sustain here, even though there was a hourly candle. If you see, there was like previously 3 hourly candles were very swift, and this the volumes were also not that great, but the body of the candle was very good. In this three candle, if you see, there were lot of the candle strength was good irrespective of the volumes, but the body was very prominent candle, prominent one with very lesser shadows. But after that three candles, if you see, it was just a consolidation, and the next morning what we saw is there was a gap up, but the price was not able to sustain there. It was taking resistance, and it was a sideways correction. But on Friday we saw a gap up, and the price was able to sustain there. It was trading with a short zone around 20,180 to 20,160 zones. So even like if we suppose we expect a gap down which is occurring at 20,100, we need to observe on a hourly time frame basis if the price is closing below, or we will have the same consolidation zone what we have expected. What we saw here, it might happen the similar case. So on hourly time frame basis, if you see, we get another few levels wherein if I'll mark it out, like as I said, plus or minus 20 points is what we need to look after. If you see this zone, what we are finding over here, like the 20,100 was the level on daily time frame basis. Now if you observe, we have the same point wherein we had on 13th, and next on the 14th we have a lot of confluence over here. There was a rejection happening, and the next day, if you see, the observe for the lower shadows, the bottom wicks, there was sellers were trying to push it down for 4 continuous hours, but the buyers were so strong that the candle got closed above. So this level has a lot of strength. So if you get price yeah, around 20,060 or 20,000 for 50 odd level. So let's make it as 20,050. So we have major confluence support at 20,100, and next support is around like 20,080 and 20,050. So these three buying zones, these are the levels where we can think of buying depending on the candle behavior. Like if suppose we are observing a double bottom, or if we are observing again at the 20,100 level, maybe double top kind of stuff. So if we are taking seeing, instead of having this bottom wicks, if we see a huge wick on the upper side, we can think of shorting, and we can expect levels of the same level what we thought of as a support. We can expect this levels as our target. So if we are thinking of, like already we are getting a gap down, so this point we need to observe, because already people who would have bought, they will be under pressure, because already gap down by 100 points, they will option buyers will kind of need to, they will try to get out in some small bounce back, and there might be a sell off happening after that. So because of that, we might expect a again correction towards 20,080, 20,043, and even if the price not able to sustain at these points, we can expect levels up to 20,000 odd levels. So which is already the weekly time frame basis, which we analyzed as our major support zone, which comes around 20,000 odd level. So I hope I'm clear with this levels. As of now, we need to, if the market is opening by gap down by around 100 points, we have to observe how it is behaving, and the people who would have bought over here, carried overnight position, they will be under pressure, and if they will try to get out after a small bounce back, and then again if the price is not able to sustain, I mean, we might see a crackdown towards 20,050 to 20,000. So that's what we are expecting and might happen. So the 20,000 level is going to be a crucial important zone level. As you see, there has been a lot of consolidation on our time frame basis. So let's move ahead with the option chain, how the call writer and put writing has happened on Friday. So if you see, this is the expiry for the 21st September, which is the next week. So as of now 20,200 at the money strike price we have seen, before that going to that aspect, the difference between put writing and the call writing has been 55 lakh on Friday itself. So if you see at the money strike price has almost 46 lakh open interest, out of which 35 lakh has been on the Friday. But if you see 20,200 has almost like 66 lakhs, so which have added 25 lakh as on that day. So cumulative premium if you see 88 points and 77 points, which comes around like on the lower side is 20,000 120 level, and on the higher side is 20,280 level. So with respect to this, we are already expecting market to open around 20,100. It is as of now. It depends on Monday morning how it is. So, but we are breaching the the break even point of this put writers for 20,200. So as I said, these people who would have sold the puts, or those who have bought the calls, they will be under pressure if the market goes below 20,100. So we need to watch out for these guys. If these people are getting out at bounce in the Nifty, then we can go enter in the PE, buy a PE at the money strike price, and then we can expect level of 20,050 and 20,000 or level. So I think we are clear with the Nifty. We will move ahead with Bank Nifty. So let's move ahead with so we'll be quick with the Bank Nifty. So as of now, if you see on a weekly time frame basis, the Bank Nifty has given all-time high, close above the all-time high. The all-time high has been like 46,370, but the closing on a closing basis, we have it has been 46,075. So already we have got around 46,000 to 230. So which is a great sign. But as I said, we saw there is a gap down in for Nifty around 90 points, so which will be almost 0.5% for Nifty. So similar basis, if you consider zero point 0.5 to 0.7%, which will be again 200 to 250 points gap down, so which might come around 46,000. So on a weekly time frame basis, if you see this 46,000 is the one where we had closure at this level for the week 17th of July. So we need to observe at the 46,000 level how it might act, because I'll go ahead with the daily time frame basis here. So if you see here, we have a lot of, after hitting a all-time high in this zone, the price was not able to sustain, even after this closure. The price was in the sideways zone and we saw a sharp correction in the Bank Nifty. So now even it is obvious that the Bank Nifty was consolidating at this zone. So already we have seen at the the Nifty Bank has closed at this point. So we might expect a consolidation zone, consolidation zone at this in this zone. You know, so let me mark the levels. Let me delete this previous levels what we had discussed. So around this, the 45,900 zone to 46,000 is where we might see a support zone. We have seen a lot of support acting at this point. So similar basis, if we expect a gap down, we need to observe if the 45,900 to 45,800 level is being held out. This level is crucial because a lot of time we have seen a bounce back from the 45,800 levels. So this is the level which we need to observe for the Bank Nifty, and we will move ahead with day hourly time frame so that we will get another clarity for the consolidation zone. If you see here on similar basis, we have seen a lot of consolidation which has happened around 45,800. If you see the lower wicks over here, it suggests that there is a buying interest at this level. A lot of people are trying to enter in this zone, and this level, if it is break on the closing time frame basis, on hourly time frame basis, if you get a closure below this level, we might expect a crackdown, but this level is important. We might expect a bounce back because, if you observe here, there is one kind of shoulder, and over here tomorrow's pattern on Monday we might expect a consolidation zone, which is what where the pattern which is forming over there is like, you know head and shoulder pattern. It might develop, and we need to give a time for this pattern to develop, and then if price is not able to sustain at this zone, we can have a crackdown with the target of the show head. So we might see around 45,600 to 45,500 odd levels, but it is dependent on the this price action to develop. So I hope I'm clear with all these levels, and hope we will see in the next video for the another content and market analysis. So till then, see you, bye bye, and please do like and share, subscribe for the our efforts, and hope we will improve ourselves to enhance our analysis. Thank you.